Now, when it comes to AMC stock, nearly everybody was under the impression that we would have squeezed so long ago, and the AMC stock short squeeze would have came and went, and there's no way we would be here by the end of 2021. But guess what? We are still here, the short squeeze is still on, and those of us that are waiting patiently, whether it happens next week, whether it happens next month, whether it happens next year, will be rewarded with the short squeeze. Now, with that being said, I had a very good conversation in the live stream today. Chris, man, thank you very much for asking some good questions and talking about why the shorts are even still shorting AMC stock at this point. Why are they still keeping these short plays live? And it doesn't make sense. So I just want to counter that a little bit to talk a little bit about why at this point their original reason for shorting AMC definitely no longer holds up. But they've got another one as to why they're keeping their short plays alive. So that's exactly what we're going to be talking about. And if it sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and we are growing our portfolios together. And look, if you're brand new to investing, you don't know how or where to buy stocks, you can use the link in the description below for Webull. It is super simple to set up your account, and a $100 deposit is going to get you at least 2 free stocks, and then any $1 crypto trade is going to get you at least $5 in free cryptocurrency. So make sure to check that out, sign up, and get ready to start investing in 2022. But we need to talk about this because it is clear that the original reason the shorts, the hedge funds, the retail investors who were shorting AMC stock back at the end of 2020, what does that even make sense? 2020 and early 2021, I mean, that's kind of out the door at this point. So back then, they were, let's just refer to them as they, right? Those that we don't speak of. They were shorting AMC stock because it was in a very tough spot financially. Revenue was declining quarter after quarter. Their debt was increasing quarter after quarter. It didn't look like the pandemic and the coronavirus were going to end. So where were they going to increase their revenue? Where were they going to, get this helping hand from? Everything seemed so bleak, and bankruptcy seemed almost imminent. It was almost guaranteed to happen. The theaters couldn't open. Nobody was going to the movies. Therefore, nothing was growing, and debt was becoming due. That's exactly why the hedge funds went out there. They shorted them. They continued to short them. They were shorting them at $2 per share. I mean, that's how much, that's how convinced the short positions were that AMC stock was not going to survive. Think about shorting AMC at $2 per share, guys. Think about that. Wouldn't you love to buy AMC at $2 per share right now? Think about actually doing it the other way with 100%, gain, but unlimited loss potential. Very difficult to fathom that. But that's exactly what they were doing. Let's fast forward to exactly where we are now. Along the year, throughout the year, we have had billions, not millions, billions of dollars raised in capital by AMC Entertainment, diluting the stock and selling the shares. This would not have happened. Imagine going out there and selling 500 million shares at $2 per share. Exactly. Now imagine selling it at $35 per share, $40 per share, $25 per share. That is exactly what AMC Entertainment was able to do because the apes went out there and bought and bought and bought and held and held and held and just lifted the price of AMC much beyond anything the mainstream media or Wall Street would have imagined possible. Now, because of that, AMC is now sitting on $1.6 billion in cash, $1.8 billion in liquid assets. They have acquired theater after theater after theater. Now, I'm not talking a little theater that seats 30 people. I'm talking very large theaters that generate very large revenues. So, revenue, where was it? A year ago, $160 million in the fourth quarter. Now they're anticipating because of Spider-Man, really, but they're anticipating $1.2 billion in revenue is what they're anticipating AMC was able to accomplish in the fourth quarter. Fundamentals, although we're not out of the woods yet, Fundamentals are clearly increasing. It is not indicating any sort of bankruptcy whatsoever. So, to answer Chris's question, why would any hedge fund be shorting AMC at this point? It has to do with fundamental value and the current price of AMC. Now, you guys know, whether you agree with it or disagree with it, you guys know that Wall Street, the analysts out there, are putting the fundamental value on AMC around $6 per share. So why would they buy it at $28 per share when they believe it's worth $6 per share? Therefore, they go out and sell it because they know one of two things has to happen. They know that the value of AMC has to rise to $28 per share, or AMC has to fall and try and meet that $6 valuation somewhere. Now, clearly, AMC can fall a little bit, the valuation can rise a little bit, or one extreme or the other can happen. But that's what they expect to take place. They expect AMC to fall and meet that $6 valuation somewhere along the way. Now, knowing that, they could go out there and say, okay, AMC trading well above fundamental value. Let's short it, and then once it reaches that fundamental value, we'll clear our shorts, we'll get out. That is the only reason they are still holding on to their short positions at this point. It's not because they think that AMC stock is going to go bankrupt. It's very clear that AMC is raising a lot of money, that they're in a stable, I'm going to give them stable, fundamental or stable, I don't know, just debt scenario, I guess. They don't have any debt due until 2023. They've got $1.6 billion in cash, and their revenue is increasing. So they will be able to sustain any sort of payments that they've got out there as the revenue continues to increase, which we should expect it to. I mean, as more theaters are bringing in more people and people are comfortable going out to the theaters and so on, we should expect revenue to rise with that. So this old thesis of AMC facing hard times, it's going by the wayside. Now they're hoping. This is the difference. Before, they actually had a solid reason. With AMC facing bankruptcy, that is a solid reason to go out there and play a stock to the downside. Now, with AMC not facing bankruptcy, they are hoping that the apes give up. They are hoping that we sell our shares. They are hoping that the stock price goes back down to its fundamental value. And they are hoping to be able to get out of their short positions. It is a much different, it's a gamble at this point for them. It's not even like an investment strategy. It's a hope beyond a hope. So if we do not give up, we've already won. And they know that. That's why they're last string. That's why they're holding on by their last hope. And they need you to believe the AMC stock short squeeze is over when it is absolutely not over. So guys, before we get to the button, what are we doing, man? Let us know your thoughts down in the comments below. Sure, we're probably going to be here in 2022 at this point, but are you willing to continue holding as long as it takes to squeeze these hedge funds? Now, if that button's still red, make sure to click and subscribe to the channel. Join us, become a bro. We are here every single day, and we are growing our portfolios together. ClayBro883 on Twitter and Instagram. We will Binance Gemini in the description below. And until the next time, hope that each and every one of you have an awesome day.